Well, we've been talking about the KenGen bond that was issued yesterday, and this really representing a big change in the way, the financing route that KenGen is deciding to take moving forward. What's your view on KenGen right now, where operational costs are expected to increase due to increased thermal generation and higher financing costs as well?
Yeah, thank you very much. What KenGen have presented to all investors is their capacity to take in new debt is about more than 100 billion shillings. And right now they are only taking about 25 billion shillings. That leaves them with a lot of room to play around in taking more debt. Certainly 25 billion shillings is not very significant to KenGen with a balance sheet of about 100 billion shillings.
Well, while we've got analysts saying that increased financing cost is likely to strain KenGen's cash flows and squeeze the company's profits in the short term, are the longer term prospects for KenGen much brighter?
Certainly, we have to know that KenGen supplies about 75 to 80% of Kenya's electricity demand. This demand is generally inelastic. KenGen still reserves, they are generally, they set the prices for electricity. With the increase in supply of electricity, it also comes with increase in revenues for KenGen. Also, we have to know that the interest coverage ratio for KenGen is about 4.5 times net income.
Okay, well, on the electricity generating front, let's bring Mumias Sugar in here, because while we've got this count yet to properly react to the surge we've seen in raw sugar prices, cogeneration is also material for Mumias Sugar. Are we seeing significant inroads being made on Mumias' side?
Certainly, because Mumias just started the other day, a few weeks ago, to generate some about 32 megawatts of electricity, which they consume about 6, and then supply about 26 megawatts to the national grid. We have seen from their profit and loss account that the cogeneration helps stabilize the financials and the net income for Mumias. A number of companies are taking cue. We have seen a company like Athi River Mining also venturing into cogeneration of electricity. We still expect to see a number of other companies following suit.
Well, of course, Mumias has been aggressively seeking this new income stream to lift its performance ahead of an anticipated rise in competition when government privatizes 5 sugar factories in the region. What's your view on the counter at the moment, given the fact that in the latest results we saw pre-tax profit for the year ending June falling back 25%?
Yeah. In the short term, perhaps Mumias is facing a few challenges here and there. Most of their sugar comes from smallholder farmers who have been in negotiating most of the time about get prices for cane deliveries to Mumias Sugar. We also see that Mumias Sugar is dependent heavily on the climate and rainfall in Kenya. From time to time, also fires do take a toll on Mumias. In the short term, yes, Mumias still faces a few challenges. But in the long term, we have to look at the plans that Mumias has. They recently received a go-ahead to go to Tana River Delta, where the sugarcane is expected to take shorter to develop and to mature. Also, the cogeneration project is a very big booster towards smoothening of net incomes of Mumias Sugar.